What is futures curvature and how it affects funds like USO? Future is a contract to deliver assets at some time in the future. The future price is determined by the supply and demand. If the market is in perfect balance, you should expect the future curvature to be flat. However, that usually isn't the case. For example, oil trades at about $100 per barrel right now. It is much higher than what it costs to produce, and therefore the price has to go down according to the perfect competition economics. This makes future oil prices lower the longer contracts you choose and is called backwardation. On the other hand, oil traded at $30 and lower in 2020, which is less than the marginal cost of production. Therefore, the prices had to go up and the future curvature was upward sloping. This is called contango. Funds like USO don't hold any oil, which means that they can't deliver the goods and that they must sell all of the futures before they mature. And they have to sell them in an orderly fashion so that the price doesn't collapse from their actions. So they sell them about 2 weeks before maturity, and then they buy in the next contracts, which mature in about 6 weeks. You may now see the problem here. The price of the contracts due in 6 weeks may differ substantially from those maturing in 2 weeks. Let's run the numbers here. Say the fund had 25 contracts for $40 each. They can sell the futures and get $1,000. However, the next contracts cost $50 and they can only buy 20 of them, which destroys the value of the fund and untethers it from the underlying index. That's what happened in 2016, and which is why the fund didn't gain much despite oil rising a lot. Similarly, if the next contract was $33, it could buy 33 of them and actually gain money. This is what's happening now, as the curve is in backwardation state. The fund gains more contracts with every rollover and overshoots the index. If you want to short oil, this fund would do more harm than good. Is there a solution? In theory, the fund could have stored oil and avoid the rollover problems. However, oil is not gold. It takes much more space, so it's more expensive to store. So it would still destroy value, and it's not clear if that's a better option.